This is Matt Larson with the REALTOR Association of the Sioux Empire. First of all, this morning, let me say, please excuse me for my appearance. We just came from the Sturgis rally and haven't shaved for a couple weeks and still have the Sturgis t-shirt on. But we will get right to the monthly indicators anyway. First of all, the new listings this month are down 0.2%. Pending sales are up 23% from 252 in July of last year to 310 this month, or excuse me, July of this year. What that really indicates to me is that our sustained growth is going to keep going. If we got 23% more pending than we did last year, that means our closed sales next month should be at least that much higher than what they were in August of last year. Closed sales in July this year were 345 compared to 276 last July. That was a 25% increase, so a huge increase in closed sales. Days on market dropped 18.4% from 94 days to 76 days, and that's huge because in the last few months, even though other indicators were good, days on market still were remaining fairly high, so we're finally getting that to drop. Median sales price was up 5.8% compared to July of last year. The sales price was up 1.1%. The percent of original list price received was up 1.2% to almost 4% less than what we're asking for houses. So in other words, if the house was for sale for $100,000, on the average it would have sold for $96,000. So it's always nice to see that one go up a little bit also. Housing affordability index was basically the same as last month at 198, and that means the average person can afford almost twice as much house as what they are buying or are living in. If it was a figure of 100, that means they would make enough money to buy the average house. We're looking at a figure of 198, so almost double what is needed to buy a house. The inventory of homes for sale was down 12.4% from July of last year. We're not quite to the point of it getting critical, but basically at a balanced market where it's not taking very long to sell houses anymore. The month supply of homes for sale was down 23%. So we're getting there again, almost to a balanced market, which is really very, very nice to see. One indicator they gave us with the statistics this month is they're saying sustained recovery will not occur without real employment and wage growth. I think they're talking nationwide. I feel in the Sioux Empire we do have good employment, we do have good wage growth, and we're not going just on the low interest rates like they are in a lot of markets in the United States. I think we've got the low interest rates, we've also got good employment, we've got wage growth, we've got really all the key figures we need to keep this rolling the way it is. Again, this is Matt Larson with the REALTOR Association of the Sioux Empire. Thank you for listening this month.